Hello, Market Club members everywhere. Adam Harrison here, coming to you from the digital studios of Market Club. Well, it's Monday, the 27th of June, and what a weekend everybody had in terms of recalibrating what they think of Brexit and Britain's historic move out of the EU. Personally speaking, I think it's a great thing. I think Britain can do much, much better and really regain its sovereignty. I think that's the important thing here, is I think a lot of these countries have given up their sovereignty for something else, and the something else hasn't been as valuable as they first thought. I thought we would take a look at the bigger picture today, going back to 2009, when we saw the last sort of financial crisis, and here we are all the way back. Here's the low right here, and you can see this is in 2009. And you can see from there on, the market just went straight up, no question about it. So this is a very old bull market. It's 6-7 years old, and that's probably the extent, duration-wise, of a bull market historically. But look at some of the pullback areas we're looking at. These are Fibonacci numbers I put in here. You can see that we have a 50% pullback right here at 1424, which is pretty interesting. And I think we can see possibly a 61% pullback. But generally speaking, if we take these previous highs like here and sort of extend that over, it type of takes it right here. This should be support now. This was resistance before. It should be support. But I would not be surprised to see the market come down to this 1425 level, 1424 level, which is a 50% retracement. That is a fantastic trading opportunity, whether you're doing it in options or whether you're just doing straight short positions in this index. But this is the S&P 500 we're looking at right now, and that's how we see things. If we take out this low right here, which is around the 1800 level right here, then you're going to see a lot more pressure coming into this market. The general public hasn't really accepted the fact that this is really a seminal change in investing and a seminal change in the market itself. So I think we have an opportunity to jump in before everybody else. But be patient, wait for the signals. All of our signals right now with our trade triangles, both the weekly and daily, are negative. You should be on the sidelines right now in this index. Here's a look at the Dow, and you can see quite clearly this has had the same type of effect, but a little bit different in the Dow. Let me show you why I say that. If we put our trend lines on, quite easy to do with Market Club, you just click there and go to the lowest point. This is in 2009, and just draw a trend line. And you can see really you have to, it's really kind of tested it, but these are very important lows, right around the 16,000 level. If it goes below there, then you're going to see this market come down and be under pressure. And I think if we put our Fibonacci numbers in, you can see how far potentially this could go. So drag it from the top to the lows, 12,500, definitely in the cards in my opinion. So let's see how that plays out. I think we're negative. I think the things are going to really start to accelerate on the downside, but only time will tell if we're right. This is the NASDAQ Composite Index. You can see from the, if we put a trend line in, again, this is from the lows, stretch it out. You can see how beautifully it fits. I mean, it's like textbook example. So there's all the points you want to look at, and you touched here, 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 and there to a certain extent. But if you go below this, break the trend line consistently with a couple of closes below that level, it's going to really start to come down in a big way, in my opinion. So Fibonacci, you got the routine right now. Just click on the highs, drag it to the lows, and you're looking at 3,200. Possibly as a 52%, 3250 as a 50% retracement. So that takes you back to these previous highs, pretty close to it, and I would think that's going to be a good place to maybe buying stocks for a longer term investment. But for the most part, watch the trend lines in both the S&P 500, the NASDAQ, and the Dow. If they're broken, it's going to accelerate the trend. These are very old bull markets. They don't go up forever. That's the key thing to remember. This is crude oil. You're going to see crude oil based on our trade triangles. You have a monthly. We have a monthly that's positive. We have a red weekly that's negative, and a daily that's negative, indicating you should be short this market. Daily, and right here, this is where we got short 48.72. Currently trading at 46.75, which is about $2,000 profit. We're below the 50 line. I'm not sure it's going to go much lower, but the reality is the trend is your friend, and the trend right now in crude oil is to the downside. This is gold. We've talked about this quite a lot. We were bullish. The beginning of the year did very well. We're still bullish. We think the move over 1300, I'll just put this in, we'll go maximum on our gold chart. You can see where we got, let's take all the trade triangles off. You can see where we got very close to the 2000 level. 1900, everybody saw in 2000. Well, that didn't happen. Of course, we reversed. But generally speaking, if we go from the highs there to the lows, we're looking at somewhere in the 1500 to 1600 level as a retracement. And that's not necessarily the start of a bull market, but I think we've moved over the 1300, which is our first level. We're looking for a $1,400 target zone, which is a 38.29% return, which is 1,385. But generally speaking, we're in a bull market in gold and trade it accordingly. Hey, hi, I'm Adam Houston. Thanks for watching. Be sure to leave a comment on our blog if you'd like to. We'd love to hear from you. And every success in these markets, and be careful. These are going to be incredible markets for opportunities for making money. So be aware of them and be sure to follow this blog and these videos. Have a great trading day, everyone.